Dave, can we just rewind for those who are maybe not 100% au fait with the NRAS scheme? Can you just give a 1 minute spiel on that and actually what the benefit to the investor is? I know it's subsidised rent, but what's that? How's that wash out?
The tenants get a discount, right? And the tenants get a discount of 20 to 25%, and then the government basically compensates the landlord with an overly generous tax-free incentive. So if you look at this centre one, the optimiser numbers, taking just a normal, like a house, for example, $400 a week market rent, you're going to give a 25% discount off that, which is $100 a week. So the tenant pays $300 a week rent. So the tenant's pretty happy with that. And then the government gives an NRAS incentive of $217 a week, the equivalent of tax-free, that's paid annually, right? So there's no tax on that. Then you got the energy income from the solar, which on a house is about $23 a week, which takes the income to $540 a week, all up, compared to $400 a week for a normal property. Then because you've given away $100 in discounted rent, you're going to get more tax benefit through negative gearing. That's another $38 a week. So you get $578 a week income, sort of, compared to $400. So it's $178 a week more than an equivalent property that's exactly the same. So, that's basically how it works. You give away $100 and you get back $255 in return. It's a good system. The investor benefits really are they get multiple income sources from a single property, they get more tax benefits, and they get big lump sum tax-free government payments annually. So that NRAS money is not paid weekly, it's not paid monthly, it's paid annually. So at the moment for a single dwelling, it's $11,270 tax-free. So if during the year the customer services the loan and services the outgoing costs, at the end of the year they get $11,270 in cash. Now that's the sort of stuff that changes the game for a lot of people because they can pay that off their home loans, right? And that makes a big difference. So it's a pretty good program in that respect. So the solar thing, fundamentally, how this works is that in most areas, we can use our system. In the Ergon area, we can't. So in Toowoomba, we use a different model, but the whole of the Energex area, which is southeast Queensland, we don't have a problem. Basically, if the system produces 30 kilowatts of power in a day, and half of that goes to the tenant and half of it goes back to the grid, the landlord's getting paid for every bit that's produced. So every kilowatt that's produced by the system, the landlord's getting money for. He gets 12 cents a kilowatt hour for tenant consumption, which positions solar at 40 to 50% less than the best available rates from the likes of Origin or Alinta. And that gives the tenants a big incentive to sign up. And he gets 12 cents for export. So if it produces 30 kilowatts, he's going to get $3.60 for the day through export and through tenant consumption. It's a simple model. The Diamond Energy charges the tenant, so there's no billing by the landlord to the tenant. Diamond Energy give us the money, and then we give it to the landlord once a quarter via an EFT transfer. It's pretty straightforward.
So essentially you're getting 3 income streams from a normal house. You're getting your rent, you're getting your NRAS, and you're getting your solar.
So this is a dual key. The rent for this is about $530 to $580. So they've picked here on the left-hand side, $540 being the middle of those, yeah? As being the rent. So the orange is optimized, the grey is normal without optimization. Price is $504,900, and then they've got the buying cost, which is your stamps and all the rest of it. And then there's the optimizer fee. So to put in the 2 solar systems and to pay for the NRAS allocations on both sides, it's $20,990. Yeah. So the total amount, including stamp duties, transfers, optimizer, is $533,982. They've assumed an interest rate of 3.29 and market rent of $540, because I think the range of this was $520 to $560. So they picked the middle one. Yep. Got rates and all the rest of it, all the insurances, etc., etc. All clear on the inputs?
Yep.
So the output of that is you've got a 3+1 dual key that provides you $540 a week gross rent in normal location, normal thing. Now, the government then wants you to discount that by 20%. So if you see the example of net rental, so gross rentals, that net rental is $405 because you're dropping it by 20%. Net rental on the normal one, after you take away your management and costs, is $508. Yep, so you've dropped this little bit here at the moment. In return for that little 20% discount that the government asks you to provide for NRAS participants, they give you tax-free $433 a week. Now here's a good thing, guys. The NRAS is a flat fee allocation. Doesn't matter if it's 1 bedroom, 2 bedroom, 3 bedroom, 4 bedroom, or 6 bedroom. You get $11,000 odd a year. So if you put it on a onto a 3+2, it's the same NRAS. It's dumb, but again, that's, you see the government's done a dumb thing here with the JobKeeper, that we've got telemarketers, you normally make $500 a week, getting $750 a week. Yeah, they're all one size fits all. So you're basically giving up the difference between $508 and $405. Yeah, $103 and getting $433 tax-free every week in return. Yeah, everyone clear on that?
Yeah.
So you're giving away 20%, but you're getting a shitload more. Now here's the kicker: you actually get more tax back with this one, because you've given away 20%. You're making a slightly bigger loss, because remember, this is tax-free. This is not counted towards your taxable income. So you actually get more tax back on top of this, because you're selling your house or you're renting your house at a lower rent. Yeah. Then you've got $33 a week net income from the solar. It's about the average between 25 and 35, and they total of 405 plus 433 plus 135 plus 33. It's a little over $1,000 weekly cash flow or gross income, versus a normal dual key, which is about 607 gross income. That gross income counts your tax deductions and things like that, guys, as you can see. Yeah? And
Yep.
all clear?
Yeah.
So even on a normal one, it's bloody good income, but when you optimize it, it's significantly better. So when you look at the first 3 years, because this is a 3-year NRAS allocation, and then it drops down to normal, which isn't bad. Normal's much better than a normal house anyway, but this is super good. So this is your net after tax, after costs, after mortgage payments, after rent, after insurance, after property management, after everything. What's your net cash flow? So a normal 3+1 dual key is $7,500 net cash flow positive. That's money in your pocket after tax, after everything. Yeah?
Yep.
This optimized is $27,500. Big difference, isn't that? So basically, for the first 3 years, you get close to $90,000 of cash flow over and above the cost of holding your property.